We break below 41.4 or so on a daily closing basis, then you go to 38, which is right here, and then eventually you could retest 30. But I'll be trading it long and short all the way around. That's going to be a major roadblock right around 48 to 50. Whether or not we get this approval, I think at this point we all know the approval is coming for the spot ETF. But the bigger question now is, does it get through 50,000? If it can't, I do think there's a rejection where we actually could trade back to 30,000.
In his recent interview, Gareth Soloway from verifiedinvesting.com delved into chart analysis, unveiling a bullish scenario for Bitcoin. The Bitcoin price is flashing green, recouping some losses during the Wednesday crash. As per CryptoSlate's analysis, this downturn is not abnormal. It aligns with the trend observed in the previous two cycles, which saw a correction of approximately 10%. This decline triggered over $700 million of liquidations within a 24-hour window, with Bitcoin's share amounting to $170 million, according to CoinList. Soloway noted that the recent action on the Bitcoin chart appeared to be a significant flushout, a pattern frequently observed in Bitcoin due to the widespread use of leverage trading. The last time Bitcoin traded above $50,000 was in December 2021. Back then, the new year landed amid a brutal bear market that saw the cryptocurrency lose roughly 2/3 of its market capitalization in 6 months. However, Bitcoin has a more bullish wind in its sails this January. With all eyes on the following key milestone, crypto services platform Matrixport recently predicted that an explosive Bitcoin surge to $50,000 looms large in January. Soloway cautioned that whether Bitcoin achieves the anticipated upward movement beyond 50,000 remains uncertain. Let's explore the video where Soloway emphasized the significance of adaptive trading, advocating for long and short positions that align with changing levels and market dynamics. But before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
If we look at the Bitcoin chart, we had that kind of flush out yesterday. Bitcoin likes to do that on occasion because there's so many people using leverage. It can kind of just sweep out the leverage, take people's money that are keeping, their liquidation prices are so close. But if we look at the chart very simply, and I love to keep charts simple here, look at the trend line here, and this is a perfectly parallel trend line right up here. And look at how you're just staying inside of this channel. And the way I look at this is simple. If we break the high end of the channel around 46,200 or so, there's an upside target of 48,000 to 50,000. And I want to show you where I get that from. It's actually a really powerful level. Take the highest point from 2019, draw through the lows of the bull market cycle, and just extend that line out, right? And what we get is about 49,000, give or take, right through there. You also have a trend line right here. That's a high pivot right there. Draw that out, gives us about 48,400. And lastly, and by the way, as a technician, I'm always looking for a confluence of levels. So where do most of the levels convene together? We do a Fibonacci retrace from the bull market high to the lows of the bear market. And the 618 Fibonacci retrace is right there, right around 48 to 50,000. And so in other words, that's going to be a major roadblock right around 48 to 50. Whether or not we get this approval, I think at this point we all know the approval is coming for the spot ETF. But the bigger question now is, does it get through 50,000? If it can't, I do think there's a rejection where we actually could trade back to 30,000 at some point, which would be a retrace to the big breakout at that 31,000 level. At this point, basically I'm a buyer at 30,000, a support. If it breaks support, then I have to reevaluate. I think it goes back towards that 20,000 range. And then if 20 breaks, then you're looking at that low of 15 and change. So it's very level by level as a technician, and you just have to accept it. Like when a level, just like when 30,000, 31,000 broke, then you had to go bullish for a potential upside move. Max move is up to 48,000 or so, give or take. And then again, if on the downside we break this channel here, and again, I'll just pop up my charts one more time to show. So if we break below 41.4 or so on a daily closing basis, then you go to 38, which is right here, and then eventually you could retest 30. But I'll be trading it long and short all the way around. I mean, that's what a good trader does, and I'm able to make a lot more money than if I'm just a buy and hodler, essentially.
The dollar was steady on Friday, heading for its most robust weekly performance since July on scaled-back expectations of steep and early interest rate cuts this year ahead of closely watched U.S. payrolls data later in the day. Despite potential bounces, Soloway's perspective leaned toward a gradual downtrend for the dollar, anticipating further declines. the unemployment rate maintained at 3.7%, coupled with a 0.4% increase in average hourly earnings compared to the previous month. Simultaneously, the total public debt of the U.S. federal government has hit a milestone, reaching $34 trillion. As central banks continue printing money, this action contributes to the weakening of the U.S. dollar. Overall, amidst these economic indicators, there's a prevailing sentiment that Bitcoin is positioned for additional upward movement. Despite a robust job market, Soloway cautioned that sustaining such high interest rates without causing disruptions would be unprecedented for the Federal Reserve. Let's redirect our attention to a video.
So the dollar, we did see it come, quite a drop from the highs, right? We were at 107 over here, and obviously the previous year in 2022 we topped out at 114, and so it looks to me like we're now making lower highs. And you can see again, we came down here to this low trend line, which is a connector from this pivot to this pivot, and right there gave us the low on the dollar. We then retraced up to this point, but at this point I'm really thinking that the dollar is going to be making lower lows and lower highs. So you're going to get bounces like we're seeing now. We could even bounce a little bit more, but I do think the dollar continues to kind of inch lower. The big level on the dollar to watch, and I'll give you guys the one to watch here, is this line here at 99 and change, right? So we could see we tested it in 2023 in February, or check that, in July, and that was this pivot. If that breaks, then you have something bigger in store for the US dollar. But right now, we're still holding above that major pivot point. And so I would kind of remain negative overall, but expect bounces at key levels. What we're seeing right now is we see a consumer that's getting more and more stretched. We see, again, personal debt on credit cards, all-time highs over $1 trillion. We see auto loan defaults starting to uptick more and more. Bankruptcies across the border at levels we haven't seen in quite a while, going back to, like, I think it's 2012 or so. And so again, the underlying fundamentals, even the PMI data has been weaker. Usually below 50 is contraction. We've been generally seeing that continuing to come out. So all the underlying data to me is insinuating a slowdown in the economy. It's just the jobs market has stayed strong. And again, if the Fed is going to keep rates at their highest levels, and again, granted, you could go back in periods where we had higher interest rates, but the rate at which they ran up was unprecedented, from basically 0 to 5.5%. That would be unprecedented for the Fed to do a soft landing or no landing at all scenario. So my guess is by the second quarter of this year, we start to see the jobs market crack. We'll even see the jobs data tomorrow, the non-farm payrolls. Let's see what it shows us. But when the jobs market goes, and look at this historically, you see a very slow tick, and then it falls off a cliff. It's where everyone starts to say, uh-oh, here it comes. I've got to lay off these people. You're seeing the stresses in the business system. I do think it plays out this year.
The stock market is booming due to the increasing confidence that the Federal Reserve can successfully manage inflation without triggering an economic downturn, a challenging achievement known as a soft landing. Additionally, analysts have widespread anticipation that the U.S. Securities and Exchange Commission will likely greenlight spot Bitcoin exchange-traded funds between January 8th and January 10th. This expectation of approval is fueling speculation about a significant surge in demand for Bitcoin, contributing to the recent gains observed in the cryptocurrency's value. Your insights matter. Feel free to share your thoughts in the comments section. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.